There's a major shift underway right now in the global financial system. In fact, for the first time in 30 years, gold has surpassed U.S. Treasuries as the largest foreign reserve asset held by central banks. Now, today, foreign central banks hold nearly $4 trillion worth of gold, compared to roughly $3.9 trillion in U.S. Treasuries. Now, this change didn't happen overnight. In fact, central banks move slowly and deliberately, and when they make a shift of this size, it really reflects long-term thinking about risk, stability, and preservation of value. Now, when the world's most powerful financial institutions quietly change course, it's often because they see risks coming that everyday Americans will feel later. Now, central banks are rebalancing their reserves. At the core of this shift is really trust. U.S. policy uncertainty has increased due to debt, inflation, and changing trade policies. Now, the U.S. national debt has surpassed $38 trillion, and the government is forced to issue ever more bonds at higher yields, and that raises default and inflation fears, and it crowds out private borrowers. The Treasury safe haven appeal is reduced relative to other assets in that scenario. Now, gold offers something that Treasuries can't. It carries no counterparty risk, it cannot default, it cannot be diluted by policy decisions, and it can't be frozen or restricted by sanctions. So in periods of cumulative instability, these traits matter more than yield. Geopolitical stress has also played a great role here. Conflicts in the Middle East during 2025 added what many describe as a fear premium to the gold prices. In early 2026 so far, events such as the U.S. capture of Venezuela President Nicolas Maduro and unrest tied to inflation pressures further boosted demand for both gold and silver. Now, these events reinforced gold's role as a neutral asset during global uncertainty. Gold prices reflect institutional demand, and gold prices have responded to this surge in demand. Now, during a rally late in 2025, gold broke through the $4,500 per ounce level. That year marked the strongest annual performance for gold since 1979, with prices surging 65% for gold. Now, that momentum continued into early 2026. We've seen prices rise another 3.6%. And forecasts tied to safety demand suggest that gold could easily reach $4,800 per ounce or higher in 2026. Some analysts are projecting an average of nearly $5,000 per ounce by the year's end. Central banks continue buying at record levels despite a record rate in prices during 2025, but central banks are still buying gold. And global central banks bought 220 tons of gold in the third quarter of 2025 alone. Now, that was up 28% from the prior quarter and above the 5-year quarterly average. Over the past 4 years, gold purchases have accelerated sharply. Net central bank purchases exceeded 1,000 tons in 2025. Major buyers included China, India, Turkey, and Qatar. And global central bank gold reserves now stand between 36,000 and 37,000 tons. Gold, in fact, represents 26% of total official reserves, and it now accounts for more of the global reserve value than the euro, the yen, and the pound combined. And what this means for the dollar is that central banks today, diversification becomes effectively de-dollarization. Governments are seeking to reduce exposure to the US dollar because of growing risks, including rising debt levels, political polarization, fiscal uncertainty, and the potential use of financial sanctions. The dollar is no longer viewed as the single dominant store of value. Instead, it's becoming one option among many. And those rivals include other currencies, gold, and even newer alternatives like cryptocurrency. And while the dollar is still widely used in global trade and settlements, its role as the unquestioned reserve anchor is quickly fading. Its share of global currency reserves has fallen to roughly 40%. It's at the lowest level we've seen in at least 20 years, and it's down 18 percentage points over the past decade. Now, as demand for dollars decline, U.S. influence and long-standing economic advantages tied to reserve currency status also weaken. This shift can become self-reinforcing. As central banks reduce dollar holdings, demand for U.S. debt softens, lower demand puts downward pressure on the dollar's value, and a weaker dollar further discourages reserve accumulation, which accelerates that move towards alternatives like gold. In 2025, the US dollar index fell more than 9%. That was its worst performance in 8 years. And so if we look at this, central banks are moving away from the dollar and towards gold. They're protecting the reserves from long-term risks like inflation, market instability. These are risks that also affect everyday Americans. Gold offers a tangible, stable asset outside of political or fiscal pressures. So if you're concerned with what you're seeing with the world's reserve asset, where the dollar is losing prestige and dominance, and you're looking for a way to protect your retirement portfolio or your assets, I'm Mackay Block with American Hartford Gold. Give us a call today, and we'll discuss how adding physical precious metals to your portfolio can give you the hedge that you need.
Discover how gold can help you protect yourself and your family. Call today or visit our website for more information at AmericanHartfordGold.com.